Listen to all that what Zeb was saying, all those concerns from Nobel Prize winners about the recessions in the US are picking up. Clearly you focus on Asia, but are they right to point that out? I mean, is it...
There are clearly lots of concerns, and every meeting you go to, people will come up with a whole list of concerns. The one thing that people aren't really doing for the moment is saying, okay, well, I am concerned about this. What proportion of my concern is in the price? And if you compare the concern to what's in the price, what you tend to find is that a great amount of those concerns are already embedded in share prices. And that's why we're actually quite optimistic on the outlook for equities.
Well, you say that the concern is shifting to earnings in Asia.
Correct. So what you've had is clearly, at first it was a whole sovereign issue within the US, and then sovereign issues in Europe, which are clearly still continuing. And now what everyone is saying, okay, well, growth is going to have to be revised down, as you heard, people talking 50-50 chance of a recession. And so one says, well, in that case, earnings have to be cut. And that's where we are right now in Asia. So the question is, how much do they have to be cut? When will it be over? When can we move on?
The interesting thing is that looking at your notes, Japan is undervalued. Hong Kong, for example, overweight. Whereas everyone's discussing a Hong Kong recession.
Correct. So, if you look at it in terms of what's embedded in the share price, then there's very little embedded in Japanese stocks. They've been in a bear market for 2 decades, and therefore expectations are very low. If you look at it, for instance, in Hong Kong, yes, they're talking of a technical recession, but a great proportion of the HSI index is actually no longer Hong Kong. It's now China. A lot of it is also global in terms of the earnings driver. So you kind of have to disassociate the two. But if you look at it across the region, there's actually very little embedded in the value of share prices.
And overall, you're overweight Hong Kong, South Korea and Taiwan, underweight for the viewers, Australia, China, India, Malaysia, Singapore and Thailand.
Yes.
What's the best value, Marcus, right now?
Well, the best value right now, we think, is in financials. So if you just assume that valuations on financials go back to their 20-year average in the next 3 years, your compound total return is about 12% per annum, which is clearly well in excess of what you can get in bonds and well in excess of what you can get in cash. So as a sector, that's the one that really kind of stands out. Amongst the cyclicals, Korea looks very cheap. It's a lot less cyclical than people make it out to be, but everyone is obviously concerned about a recession. You don't want to own a Korean equity market, but from a value point of view, it's certainly there.
I must ask you about, over the weekend, Jackson Hole, quantitative easing. Now, some are saying, in fact, that there really is no relation between quantitative easing and Asia. If it comes, the hot money they're calling it, comes to Asia, it really isn't relevant. Some are saying, actually, it is really relevant because it comes inflationary. How would you take it? And clearly, what's happened over the weekend for the viewers is there'll be a 2-day meeting. So they could hint towards another tool or fresh quantitative easing on the 21st of next month.
Well, the way the money comes to Asia is if the dollar weakens further, you've got upward pressure here on interest rates, on currencies, therefore you tend to have lower interest rates. So clearly, it does matter. And what we saw from QE2 was the dollar weakened, upward pressure on currencies here, and you still had lower interest rates across the region. So it will matter. But what's important is not whether they do QE3 or not. What the Fed has clearly signaled is if they believe more needs to be done, they will do more. And you can't ask for more than that.
And how does it change your thinking when you talk to your clients? If they say, Marcus, what does it mean, QE3 coming in? Do you change your asset allocation or not?
No, not a great deal. Our view has been for a while that growth will be subpar. Many economists have written papers on this. So after a financial crisis, growth is always subpar. That's the kind of benchmark that we're running with. So what you've got also is a period, or a very long period, of very low interest rates. And for the moment, people aren't focusing on that discount rate, which is near enough zero. And so the net present value of a lot of equities is a lot higher today than it's been historically, but the indices are not. The valuations certainly are not. And that's because everyone's just focused on growth downgrades, recession, fear of this, fear of that.
The headline from you and your team really is watch out for earnings guidance being cut for the fourth quarter.
There'll be some small cuts, but by and large what you've got is a consensus is running for about 13% earnings growth. You've got nominal GDP of between 11 to 13% across the region. Unless economists really take the numbers down significantly, it's not as if 13% earnings growth is really aggressive for both this year and next year. So from that perspective, if you look at what's in the price, equities are already telling you that they think there's a recession, i.e. earnings are falling. So unless earnings fall 30% or more, it's pretty much there.